Okay. Hey everyone, welcome to lesson one of this YouTube series called Dear Business Owners. And again, this is geared to all my entrepreneurs and business owners out there. Lesson one will be about commingling funds. There are so many different things wrong with commingling funds, right? So the idea here is, or what I'll be covering in this week's lesson is, what does it mean to commingle funds? Um, why is it dangerous? And how can we mitigate that? So those three important things we want to touch on today. Okay. And again, even if you're not sure if you want to start a business or you've already been doing it for 5 years, you never know. This is one of the most common habits of business owners, believe it or not. Right. So we definitely want to make sure that we are paying keen attention to the things that will be said today. With that being said, my name is Rose Brown, also known as the Accountant Therapist, and I am the CEO of Brown Swift Women Consulting and Accounting Firm, where we provide an array of accounting services. Now, based on this concept of their business owners, the idea is to speak to business owners from an accountant perspective, right? So it's a letter from the accountant, and that includes areas such as business formation, payroll, how to pay yourself, of course, um, taxation, and then we have bookkeeping, right? So this week, commingling, that's mainly connected with bookkeeping. But it's one of those concepts where it's simple, but how easy is it to apply, right? So let's dive right into it. So what does it mean to commingle funds? So pretty much when you are commingling funds, it's literally this, right? You have your personal over here and you have your business, and they're all going on, all taking place in the same account. So what happens is you may have a business account, but you operate personally from it. Or you may have a personal account and you just have chosen not to open a business account. So everything's just happening in the same place, right? There are so many things that can hinder you from growth due to commingling funds. So know that we understand what it means to commingle funds. So you want to definitely keep your personal finances separate from your business finances. It doesn't matter how small your business is. And this is one of those things where people are like, well, no, man, it's not that much of a business. It's just a side gig. It don't matter what it is, especially if you anticipate growth within your business. No matter how small you start, you want to avoid commingling of funds, right? So if you see the banner going on down there, it says, "Dear business owners, avoid commingling funds at all costs." Okay, so now that we've broken that down, let's actually look into why it's dangerous. When you commingle funds, right? Think of it as you're robbing yourself of tax deduction. Here's why. Let's say you have a common place where you shop. You sell products, and in order to sell your products, you need to get some raw materials, right? Let's say, for example, you go to Walmart. You go to Walmart for business, you go to Walmart for personal. If you have both your personal and business expenses coming from the same account, if at year end you decide to go through your books or go through your finances, it's going to be like, oh my gosh, what was that purchase for? And ideally, we're living in a time where we're literally moving so fast. And I don't know about all of y'all, but for me, I don't even remember some stuff that happened last month, right? So I have to make sure that I'm keeping on it as I go. So for folks who literally don't have the time and they don't get the time to review their financial records for their business until year end, it's like, oh my gosh, what happened a year ago? Don't let it be 2 years now, right? So a year ago, 6 months ago, it's hard to recall what those actual expenses are for. So if you have one hub in which you're using for both personal and business, and you're using it at the same vendor, the same place where you make purchases, it's going to be difficult to determine at that point in time, well, is this business or is this personal? Here's where it gets tricky. If you incur an expense on a card that you use to commingle funds and you don't recall what that expense was for, it's almost automatic that it's going to be personal. Because if you ever go, unfortunately into an audit and you're asked this question, hey, what was this expense for? If you have no proof to substantiate your claims, it's going to be your words against the auditor's words. So you want to make sure at all times that you're able to substantiate your claims. So if you have all your business activities coming from one account, it's going to be much easier to say, hey, I went to Walmart. This is a business card. I know that this is for business, right? So that's the first thing. Now, if that expense actually gets categorized as your personal, right, because you don't know what it was for, you're pretty much paying taxes twice because that income or that money that you use to make that purchase, you've already paid taxes on it. Usually that's earned income. Now that you're taking it again, you're considering it income to yourself, depending on, well, generally it's still income to yourself if you're not able to take it as a write-off, right? So you're paying taxes twice. So that's the first big major issue. When you commingle funds, you tend to pay taxes twice because you're robbing yourself of tax deductions. Okay. Now, in addition to that, if you need financial information about your business, how things are going, how you've been doing, or if you want some projection, it's going to be extremely difficult for you to be able to untangle all that you have going on in one account, right? If you try to pull, say, a profit and loss or a balance sheet, it's going to look a little weird, right? Because you have expenses that you're not too sure if it's business or personal, or hey, you have everything literally sitting on the same profit and loss, whether or not it's personal or business. So it tends to skew your financials when you commingle funds. So you definitely want to refrain from commingling for another reason like this, right? Because if you go to the bank to get a loan, they're going to want to see your financials to see what's going on. If you use those same financials to file your tax return, and again, if you're ever in an audit and they need proof to substantiate all your expenses on that profit and loss, you're going to want to know what those expenses were for. Can you prove it? And if it's a personal account, again, you could put yourself in trouble without even knowing it, right? Okay. In addition to this, right, we're just kind of building off of why it's so dangerous to commingle funds. If you're the person doing the bookkeeping yourself, or even if you hire someone, it makes it extremely difficult. And actually, I'm going to take a step back and just look at it from you as a business owner keeping track of your records. It becomes difficult because, like I said, if it's 6 months down the line and you're trying to figure out what an expense was for, it's going to be difficult to determine what that is, right? Especially, again, we're in a time where we literally have no time for ourselves. So it's going to be difficult for you to determine at that point. And if you have a good memory, kudos to you, great, no problem. But for best practices, it's safe to go ahead and not commingle, right? Now, the last thing that I do want to note as it pertains to commingling funds is the fact that to a certain extent, it could be considered illegal because when you commingle funds, right, that means your business, personal, it's almost intertwined as if it becomes one person, it's one entity, but really it's from a personal perspective. So let's say you obtained an LLC, and I'm not going to touch too much on this because it's a legal matter, right? So I'm just going to give you the gist of it from an accounting perspective. So if you have an LLC, you have an S corp or C corp or something of that sort, and the business is a business. But if you begin to operate personally from it, if you're ever, say, in a lawsuit or something like that, and they're able to prove that you've been operating personally, that liability coverage that you have from the business becomes obsolete. So there are so many different reasons why you should absolutely not commingle, right? Not only are you robbing yourself of tax deductions, but you're also skewing your financials. It makes bookkeeping extremely difficult. And you can also be subjected to legal issues because of commingling of funds, right? So now that we've touched on what is commingling, why is it dangerous, let's look at some ways that you can try to mitigate this. Now, it's important to note that even though this concept sounds so simple, for a lot of people, it's very difficult to implement because of habits and discipline and how you operate. A lot of folks who've been doing this for a very long time, it's going to be hard for them to stop, commingling because that's all they've known. Right. So the first and foremost thing you want to do is make sure that you have a completely separate account. So you need a business bank account and you need a personal bank account. Now, as I always say, one size doesn't fit all. So you need to be able to speak with a professional like myself to determine what's going to work for you. as it pertains to what separating everything looks like. So when you have a business account, you have a personal account. A lot of times the question become, well, how do I pay myself? How do I get money for myself? Again, that's going to be another deep conversation depending on your entity. How you pay yourself looks a lot different. And of course, that's definitely going to be a lesson within this series that I touch on. But the first step here is to separate those. You get a business account, then you get a personal account. Separate them. The one thing that I would note in the meantime, if you so happen to have expenses that you need to cover personally, do transfers instead. Do not use the business account to go to the store and make a personal purchase. Do a transfer. That could be referred to as a shareholder distribution, owner's pay, owner's draw, those sorts of things. That's going to be your best route to go. But again, from what I'm saying today, you definitely need to speak with a professional like myself to determine the best way to pay yourself, because that's oftentimes a concern for a lot of people. If I separate this, how am I going to pay myself, right? There's different ways in which you can pay yourself depending on your entity, but you need to have that conversation, right? So once we get those accounts separated, great. Now we need to practice good habits, okay? It's one of those things where it's hard to do, but easy. The easy thing is to just use one card and just purchase all over the place, right? One account, and we just scan it, swipe it, whatever we do. But the hard thing is to say, you know what? I'm going to use this card because it's business, and I'm going to use this card because it's personal. It's hard because it's not something that we're used to. And we have to actually implement discipline and actually stick to the script in order for it to work, right? Especially if you've been doing this for so long and it just becomes a habit for you. You want to make sure that you be intentional about the purchases that you're making, the card, the payment method in which you're making it, all of those sorts of things, right? And yes, things happen here and there. You may slip up every now and then. But again, you want to be intentional to say, I'm actually going to use my business card for my business transaction. And I will not use my business card for my personal, right? Again, things happen, but you want to make sure as they happen, you catch them very quickly. If you need to retain a copy of that receipt so that you can attach it to the bank statement, if you're using an accounting software, you can attach it there so that you can always know that even though I made this purchase on my business, it was for personal, or if I made it on my personal and it was actually for business, here I can still get to capture that tax deduction. Again, the idea here is to not rob yourself of tax deduction, because honestly, that's expensive because you're paying taxes twice. Nobody should want to do that. Okay. All right. And the last tip that I would recommend with that is to make sure that you're keeping track of your financial activities, your financial transactions on a frequent basis. So that could mean, hey, I'm doing it monthly, I'm doing it bi-monthly, quarterly the most. Honestly, you need to be up to date with your financials at least on a monthly basis. Even if you're only seeing your financials on a quarterly basis, you want to make sure that your bookkeeping, your transactions, your organization from a financial perspective is being done at least on a monthly basis, right? This way, you always have the numbers. If you need to pull a report, everything is there when you need it, right? So that pretty much concludes today's lesson. And just to recant, well, no, not recant, just to revisit what we talked about today. We discussed what does it mean to commingle funds? Why is it dangerous? And how can you mitigate it? Right, so those three things. Commingling of funds, just to revisit that, is when your financial, from a personal and business perspective, is being done through the same bank account, right? So you have your business and your personal being operated from the same place. It becomes dangerous because not only do you rob yourself of tax deductions, but you also skew your financials, and it could pose legal issues towards you and your business. Okay. And then, of course, to mitigate that, literally, it starts with applying discipline. Like, it sounds easy, but it's just, again, one of those things. You want to make sure that you separate it. Just make a decision. I'm gonna separate it. I'm gonna do business and I'm gonna do personal. Then you operate from them accordingly, right? So again, you want to make sure that you speak with a professional like myself to help you through the situation, because a lot of times I'm saying these things, it sounds easy, but we need an accountable partner. We need someone who's going to say, hey, you should not be doing that. Or, hey, this is a way that we can not do that, right? Something that's going to work for you, because I always say one size doesn't fit all. You have to determine what's going to work best for you. Okay. All right. So if you have any questions, of course, you can drop it in the comment section. Don't forget to like, share, comment, follow us on social media platform. For myself, I'm at The Accountant Therapist. For my accounting firm, it's at Brown's FCA. LinkedIn, Instagram, and Twitter. I always forget those. But again, don't forget, like, share, comment. Let me know what's going on. And don't forget, I am here every Tuesday at 7 p.m. with a different lesson, right? During the series, I'll be teaching different lessons. And again, they're not too long, but it's just one of those things. Again, it's Dear Business Owner. I'm writing you a letter verbally to let you know the do's and don'ts of what to do from an accounting perspective as a business owner, as an entrepreneur. And again, for some people, it looks different, but you want to make sure that you keep it consistent as it pertains to you connecting with a professional like myself, especially as you look to grow within your business and just do great things. You need a proper team. And again, that's certainly something that I'll be touching on. But again, my name is Rose Brown, also known as The Accountant Therapist, and I will see you next week at 7 p.m. Okay?